AMD stock has been on a wild ride, up close to 200% in the past 5 years, but more recently it's been trading sideways. I built a 10-year revenue and free cash flow forecast, and my fair share price is, well, I'll reveal that later on in the video, along with the estimated annual return and whether I'm rating AMD as a buy, hold or a sell. What I can tell you now is this: even with optimistic assumptions baked in, the market might be already pricing in a bullish outcome. So, does that mean that AMD is fairly valued, and is there still upside left in the stock? In this video, I'll break it down into 4 parts, starting with what actually drives AMD's business, followed by a look at the financials, a bull versus bear case valuation, and finally a quick technical analysis showing where the stock might go next. So yeah, let's dive in. And to start off, let's set the scene and look at a snapshot of AMD's performance over the past year. We can see that revenue was up and EBITDA was also up at a higher rate. That's great to see, and the company has a healthy EBITDA margin of 20%. Now the share price actually has gone down by roughly 14% in the past year, and the company is headquartered in California in the United States. So AMD is one of the world's leading semiconductor companies, designing high-performance CPUs and GPUs for everything from gaming and PCs to data centers and AI infrastructure. Once an underdog to Intel and Nvidia, AMD has pulled off one of the greatest tech turnarounds in history, thanks to its CEO Lisa Su, who reshaped the company into a serious competitor across multiple markets. AMD's current product lineup includes Ryzen CPUs for consumers, EPYC chips for data centers, and Radeon GPUs for gaming and graphics. It also recently launched the MI300 series for AI. But after years of exponential growth, the stock is no longer cheap, trading at over 40 times forward earnings. So then the real question is the AI hype already priced in? Well, at least from the bull case we have a few key points. We have first of all AI and data center growth. AMD's MI300X chips are targeting the booming AI server market, and while Nvidia dominates today, AMD is carving out a high margin niche. We also have diversified product lines, from Ryzen for PCs to EPYC for servers. AMD's breadth reduces dependence on any single segment. And then we have execution and leadership. Lisa Su has delivered on nearly every promise in the last decade. If anyone can continue scaling AMD, it's this management team. But of course, we also have a bear case. First of all, we have valuation risk. Even with strong execution, AMD trades at a premium, meaning expectations are sky high. We also have Nvidia dominance. While AMD is gaining traction, Nvidia still commands over 80% of the AI GPU market. AMD needs to further prove it can seriously compete. And lastly, we have cyclicality and macro headwinds. The semiconductor industry is notoriously boom and bust. Rising interest rates and enterprise IT pullbacks could hurt AMD's growth. Okay, so now we have a sense of what AMD does today. Let's move on and look at some historical financial data of the company. And to do that, let's start off by looking at the core financial performance of AMD in the past 5 years. Here you can see the revenue in blue, and we can see the EBITDA in green. And we can see that the revenue has grown by 27% on average per year, which is great, and the EBITDA has grown by 33%, showing us that the company is becoming slowly but surely more profitable by each year. On top of that, we can see that the EBITDA margin has expanded from 17% in 2020 all the way up to roughly 20% in 2024. Let's also take a deeper look at debt and see if it's any risk in the company today for us as investors going into the stock. And here we can see the debt in purple, and we can see the excess cash within the company in green. And yeah, we can see basically, right, the excess cash today is much larger than the debt in the company. Although the debt has grown by 43% and the excess cash by 26% per year, we can see that the debt to EBITDA ratio is basically 0 times, making debt a very low risk for investors. As we later on will look at the free cash flow as part of the valuation of AMD, let's also look at the performance of free cash flow in the past 5 years. Here we can see again the revenue in blue, and instead of EBITDA we have the free cash flow to equity, so the relevant free cash flow for us as equity investors. Now we can see, yes, revenue has grown, but the free cash flow has declined by 16% per year on average, showing us that yes, the company has strong earnings on paper, but the relevant free cash flow for us as investors is not performing that great. Now the final chart that I would like to show you for AMD has to do with the share performance of the company, and this worries me a lot. First of all, we can see the average share price per year of the stock here below in the dotted line, but the worrying part has to do with the number of shares outstanding within the company. Those are these blue columns, right, in millions, and we can see that these have grown by 8% per year, diluting shareholders by 8% per year, which isn't great. What AMD does is that they issue stock-based compensation to their employees, but dilutes their shareholders. Later on, we'll see that this will have a huge impact on our final valuation. Okay, so we're taking a look at the historical numbers of AMD, seeing what's good and what's bad. Let's move on to the exciting part, which of course is the stock valuation. And let's start off by looking at my key assumptions just for full transparency of what I'm assuming for the company going forward in the coming 10 years. So that is 2025 all the way up to 2034. So in terms of revenue growth, I'm assuming 16% per year. In the past 5 years, it's been 27%. Now the growth will be higher for 2025, and then it will basically decelerate all the way up to 2034. In terms of EBITDA margin, I'm assuming 25%. That's slightly higher than the average over the past 5 years. Now, in terms of the enterprise value to EBITDA multiple, I'm assuming 30 times. In the past 5 years, it's been 44 times. So making the multiple slightly smaller as the company grows bigger and the growth also decelerates in the future. Now, in terms of free cash flow growth, I'm assuming 20%. And this is a big assumption because over the past 5 years, it's been per year on average minus 16%. So I'm assuming that the company can turn around on a profitability basis and become profitable on a free cash flow basis. Now, the free cash flow yield I'm also assuming is 4%. That's the amount of free cash flow we get relative to the share price in 2034. And finally, just for full transparency, I'm using a discount rate of 14% for AMD in my discounted cash flow analysis. And here you can see basically the yearly growth rates for revenue and free cash flow I've applied for AMD all the way up to 2034. Now I'm assuming revenue to be roughly 18% growth for this year. That's in line with the company's guidance, and free cash flow to also grow in line with that revenue. Then I'm basically accelerating revenue and free cash flow growth all the way up to 2027 as AI spend might increase in the coming years, and then I'm decelerating growth all the way up to 2034. Now for most of these years, I'm assuming higher growth for free cash flow as the company will probably become more profitable. That's what I'm baking into my assumptions. Now, if we apply all of those quite optimistic assumptions, assuming that revenue will continue to grow and that profitability will expand, we get a fair share price of today at roughly $146 per share. And this is at least a discount when compared to the current share price of 5%, and also estimates that we as an investor could get 13% per year as an annual return. And this basically shows us that the company is pretty much fairly valued today. We have a slight discount, but the stock is pretty much fairly valued. The reason could be that this is a very popular company. A lot of institutional investors and retail investors are heavily invested into AMD. So it's not like it's a hidden stock that no one knows about, and that is also reflected in the current share price. If you're enjoying this video so far, feel free to drop a like or subscribe or check out my channel. It really helps out. Now, if we were to invest into AMD today, we would have to buy the stock. That's negative. We get some free cash flow for 2025 and all of the years that follows, right? And then we sell the stock in 2034 at our price target, and then we can see the total gains in blue, right? And these total gains relative to our initial investment nets out at roughly 13% per year. But what happens if we're wrong with our bullish assumptions and the company does not manage to perform in line with our expectations? Well, I built a bear case as well. Here I'm assuming revenue growth at 10% and free cash flow growth at 11%, so much lower than the bullish case assumptions. And if we apply these growth rates, we get a fair share price of $74 per share, implying that the current share price today is then trading at a premium of 87% compared to the bear case price target, and then the annual return drops all the way down to 4% per year. And I suppose this kind of highlights the risk of owning a stock that is so widely owned and talked about, and where so many, including myself, have these kind of bullish assumptions. If the company underperforms for whatever reason, then we only get 4% per year, which is basically sideways for 10 years straight, which isn't a great return. It all comes down to your personal view and where you think AMD might perform in the coming 10 years. Now, what makes a great stock is not only a great business and that it's well priced, it also needs a third element, which I call momentum. So let's take a look and see if AMD stock today has that kind of technical momentum. And yeah, here we can see AMD stock chart over the past few years. We can see it's been quite volatile and it's been a roller coaster for investors. Now, it's been trading mostly sideways, but we're seeing something different today, right? We're seeing that the company has bounced back from its long-term upward trend line, which is a great sign on a technical basis. And on top of that, if we just zoom in a bit at the stock price, we can see that the stock has broken above a long-term support line, which is this green line, right? And the stock is today finally above the 200-day moving average, which is this downward sloping blue line. That's the average share price over the past 200 days, which is a bullish signal when the stock price is above. So then I suppose if you're bullish around AMD stock and think that the company could surpass even my own bullish estimates, then it makes sense to buy the stock today, or at least start nibbling at the company or adding more stock if you already have a position. Especially if the stock falls back down into the 200-day moving average and bounces back again, that's another great sign that the stock has long-term momentum going forward. However, if you're bullish around the stock but would like just a more attractive price to get into the stock today, here we can see what happens to the annual return. If the stock goes down, that's green for new investors, or if the stock price goes up, that's red. And we can see today we're 13%, assuming my bullish assumptions. But if the stock price would go down by roughly 30%, then we're at 18% per year, which of course is much more attractive. I don't know if that's realistic, but if that happens, then you can see what happens to the annual return if the stock price goes down. Okay, so let's move on from the stock valuation and go to my final rating and see where I've rated AMD stock today. Okay, so given all that we know of AMD stock and all the assumptions I've gone through in my valuation, I've given the stock a final recommendation of hold today and a final star rating of 3.5 out of 5 stars. And here you can see all the key criteria behind the rating that AMD has received. Now, where the company hasn't scored that well, first of all, has to do with the free cash flow performance over the past few years. It hasn't been that great. On top of that, the company is diluting shareholders by 8% per year, which is way too high in my opinion. And that's a big part of what's killing the valuation case for AMD. Now, on top of that, and this may be a bit more subjective, is that the stock performance hasn't really been that consistent right in the past few years. And finally, it's pretty much fairly priced today, but that all depends on your personal opinion. Are you more towards the bullish case or the bearish case, or do you think that the bullish assumptions are not bullish enough? It all depends on your personal point of view of AMD stock today. Thank you so much for watching this video. If you found it informative, please feel free to like and subscribe. And if you go down to the link in the description below, you get the free one-pager, which includes 5 years of financial data, my full DCF assumptions, and the forecast summary as well. So yeah, thank you, and I'll see you in the next one.